Hello everyone, my name is Jerry Yu, the Family Money Doctor. Thank you very much for joining us. I have been a tax strategist and retirement plan specialist for over 20 years. Throughout these 2 decades, majority of the people I meet have expressed a common sentiment, which is when I retired, I will have no income, therefore my tax obligations will be lower. But is that true? Today, I would like to provide some information why I do not think that statement will be the reality. Before I dive into today's topic, I would really appreciate it if you can hit the like and subscribe button. It will help me a lot. Will my tax obligation be lower when I retire? I'm going to keep it simple. I'm not going to talk about your Social Security's rental income, investment income's impact on your taxes. Okay, most of my clients are doing quite well with their investment portfolio, but many of my clients do not pay much attention to tax planning before our first meeting. While investment returns are important, understanding the impact of income tax and capital gain tax is crucial. Today, we will discuss the history of U.S. taxes and the current situation, and I will let you decide if you think future U.S. taxes will be lower or higher than they are now. And this question does not require a CPA license. It's just common sense. When I was young, I did not like study history classes. I always questioned its relevance to my life. However, my high school history teacher once said that understanding history help us judge and predict what might happen to our future because history always repeats itself. And that statement changed my perspective on learning from the past. Many people claim that the current U.S. federal income tax is very high. Well, today let's look at the history of U.S. income tax evolution. The U.S. federal income tax was established in 1913 with an initial top marginal rate of 7%, which was indeed low. Well, however, it didn't last long. By 1917, in order to fund the World War I, the top marginal income tax rate surged to 67%. After the war, the rate gradually decreased, falling to 25% between 1925 to 1931. But by 1932, it started to rise again, reaching to 94% in 1944 to finance World War II. And this is not the worst part. We all have heard of Ronald Reagan. Before he was our 40th president, he was a Hollywood movie star. Many questions why he only made 1 movie per year. The legend has it that in 1944, if your income was over $200,000, any income above $200,000 was taxed a 94% federal income tax rate. Being a resident of California, California's state tax rate was 6%. So anything he makes over $200,000 are all going to taxes. See, having experienced the high taxes during World War II, Ronald Reagan, upon becoming the president in 1982, he lowered the federal tax rate to 50%. Later, under President Obama in 2013, the rate was reduced to 39.6%. And President Donald Trump further lowered the top marginal rate to 37%, which is the current rate. But looking at the historical curve, do you think our current tax rate is high or low? And most people would say, well, it's relatively low compared to the historical rates. But what about the future? Will the U.S. tax rate be lower or higher than now? This screenshot was from the website usdebtclock.com, taken on June 6, 2024, shows the U.S. national debt is at $34.8 trillion. The national debt represents 122.28% of the US GDP. By the time you watch this video, our national debt is well over $35 trillion. About the future, whether in 10 years or 40 years, what if we have a president all of a sudden grew conscious? He or she decided to reduce our national debt. How would they do so given the current spending habit of the US government? Where would the money be coming from? I think you already know the answer. The answer is through increasing taxations. This is the quickest and easiest way for any government to increase revenue. If you think future taxes will be higher than today, are your investment portfolio exempt from future taxes? What if 40 years from now, when you decided to tap into your 401k and the federal income and state income tax rate is much higher than today? See, the purpose of recording this video is to raise the awareness about tax planning. See, I have a chapter in my book, Fortify Your Financial Kingdom, dedicated to talk about tax now investment, tax later or tax deferred retirement plans, and tax advantage plans. I use an apple orchard to illustrate the impact on the bottom line in all three different scenarios. It is my recommendation to set up an appointment with your CPA or financial advisor. Your team should review the tax exposure on your various investments. Maybe it's time to rebalance your portfolio. Well, thank you for watching my video today. I hope this information has been helpful, and I will see you in the next video.